Heaven knows how much silver is really flowing out of the world's exchanges and backdooring out of the ETFs, or how much the US government is accumulating. But whatever it is, it's all being done at an artificial price until it's not, and until the supply demand fundamentals overwhelm. And I really do believe we are entering that period of time, in particular with rising rates putting greater and greater and greater strain on a banking system that will ignite the fuse of reality to a lot of people. And you could argue by that time, the market is so confused and so leveraged and so upside down that it'll be very difficult for most people to protect themselves in something like silver.
Given the current macroeconomic environment and the supply and demand dynamics, silver is significantly undervalued at $21.76 an ounce. According to the Silver Institute's April 2023 report, global demand for silver rose by 18% in 2022 to a record high of 1.24 billion ounces. This surge in demand has led to a substantial supply deficit, with predictions of further shortages in the years ahead. In 2022, silver recorded a deficit of 237.7 million ounces, marking the highest supply shortage on record. According to Andy Schectman, there is a significant amount of silver leaving the world's exchanges and ETFs. However, he underscores that these activities are occurring at prices that do not accurately reflect silver's true supply and demand fundamentals. Andy suggests that the silver market is on the brink of a significant transformation, particularly with rising interest rates exerting pressure on the banking system. Regarding the manipulation of silver markets by banks, with a specific mention of JP Morgan, Andy mentions that despite fines and allegations of market manipulation, these institutions are still permitted to operate some of the world's largest silver trusts. In a recent legal development, two former precious metals traders at JP Morgan Chase & Co. were sentenced for their involvement in fraudulent activities, attempted price manipulation, and spoofing. This extensive scheme spanned over 8 years and resulted in over $10 million in losses to market participants. Andy envisions the potential for a mass awakening triggered by banking system issues, particularly uninsured deposits in commercial banks. If one of these banks were to fail and implement a bail-in, it could lead to chaos and disrupt financial markets. Consequently, he suggests that banks like JP Morgan might eventually transition to taking long positions in silver, potentially causing a significant shift in market dynamics. We will now bring you clips from Andy Schectman's interview with Road to Ruta. But before we do, if you want more videos like this, hit the subscribe button and turn on the notification bell for more updates. Thank you and enjoy the video.
It's very obvious. Look, if JP Morgan, if what they did was so egregious to where they put 2 or 3 of their traders, including Michael Nowak, who ran the desk, in prison, then why were they allowed to continue to run the world's largest silver trust? Why was their fine $920 million, but their desk made $1 billion that year? They walk away 80 million up. No worse for the wear. It's a company that makes $1 billion in profit a month. There's no question that they're behind it, but the bigger issue to me is the fact that, and the reason you don't hear bitching around the world, is that this is falling into the hands of the countries around the world that are accumulating it at subsidized prices, allowing a country like India to import over 300 million ounces. The market is so confused and so leveraged and so upside down that it'll be very difficult for most people to protect themselves in something like silver when there is a mass awakening by the public. And I do believe it starts with the banks. I think that is the fuse that lights the banks. I mean, even talking the commercial banks, they hold right now they have over $7 trillion in uninsured deposits, just the top 4 commercial banks. So, that's global, that's total. The top 4 commercial banks over 4.185 trillion in uninsured deposits. I mean, one of these banks goes and gets bailed in, and the whole fuse of chaos is set off immediately, where everything that we know to be true about market fundamentals and dynamics and prices and suppression all change. And I have a feeling when that happens, companies like JP Morgan are going to be on the long side. And they've suckered as much as they can, to shake the weak hands, the money managers, off the tree again. But when that moment happens, I'll bet you dollars to donuts that a bank like JP Morgan will be on the long side, and it will put companies like it did Bear Stearns, out of business very quickly. If the banks are forced to sell it, you have many, many eager participants around the world standing ready to take delivery, take the other side of that sale and stand for delivery. That's the type of moment that I've seen for a long time. Now, maybe I have a curse of seeing things like you do long before they actually come to fruition, but the mathematics of it don't lie. And we're going to reach that point. That Rubicon has to be crossed at some point. Question is, how far are we from it? Don't know, but I will venture to say that when you see the commercial banks start lining up again on the long side in this environment where rates keep rising, look, I don't think 1 out of 100 people in this country understand what a bail-in is, or that it's law and was written into the Dodd-Frank Act. And it's one thing for us to talk about the frailty of all the markets and protect yourself with silver, et cetera, but it's another thing for people to lose everything in a bank account that they think is safe. Well, I'm not going to be in stocks or bonds. That's too risky. I just leave it in a bank in a CD. Well, boom. And then like, oh my God, what's a bail-in? What? It's law? Are you kidding me? When did that happen? And I think that's the catalyst. And then when you realize that the number 2 in charge of economic theory for the White House, Lael Brainerd, that's what she wants. She's a modern monetary theorist. Call the banks. Well, that's how you do it. You blow up some banks and let them get bailed in, and it becomes chaos immediately. And everything that is true right now changes. Point, not only does it blow up those banks, but the act of running to the banks means they have to sell their treasuries, which puts rates up higher, which kills more banks. It feeds upon itself. And if you were that diabolical to do this, to reset the system, to blow up the banks, to issue a CBDC, don't worry, we'll make you whole. Sign on the dotted line, take the new CBDC, and you'll get your money back. Well, there's your event. Now, I'm not saying that's going to happen this week or next week, but that's what I see as the ultimate end game. If you look at how else do you get people to take a CBDC, most people don't want it. I mean, parts of the world, they're burning down the banks that where they're being told they're rolling out a CBDC. People don't want it. So you have to have an event that makes people accept it. And our banks are so leveraged right now with over 7 trillion in uninsured deposits. I mean, that's a fuse, coated in kerosene, just waiting for a cigarette to be dropped on it.
The precious metals markets are significantly influenced by a small group of bullion banks, motivated by their vested interest in supporting the Western financial system. Andy asserts that the bond market is particularly susceptible to the influence of these banks, and convincing those who deny this fact can be quite challenging. Nevertheless, individuals well informed about this manipulation understand the far-reaching implications accompanying declines in precious metal prices. For instance, even as silver prices fell on Thursday amidst weakness in the US dollar, traders maintained a bearish outlook on precious metals, largely due to the recent surge in nominal and real US yields. Andy suggests that among those who are well informed, there is a growing sense that a significant financial reckoning may be approaching. Those who fail to recognize the imminent dangers lurking within traditional assets, such as bank accounts and treasuries, could be caught off guard. Let's get back to the interview.
If you deny the fact that the metals markets are controlled by a handful of bullion banks with a vested interest of supporting the Western system, the bond market, at this point, it's a lost cause to try and convince you. The people that were there understand it. And if anything, it energizes them when the price falls. They understand what it truly means. And I think there's a feeling that we're getting close to that moment. And, we've been saying that forever. I'm the little boy who cried wolf. I'm on the cover of that book.
We all are.
But the wolf does come at the end. And I think people are beginning to sense that. They feel that not just in silver's relative underperformance, but just in everything around us on a large scale. And the people who don't see what's coming will not have the ability to get out of the way of it. And I talked a lot about that. So, I think you can only save the world, Bix, one person at a time, starting with yourself. But when you look around and see the macro picture, if you don't see the danger in traditional assets, in bank accounts, in treasuries, which the fall in the 10-year treasury amounts to one of the largest drops in recorded market history. And it's just beginning, in my opinion. So, yeah, there's a lot to be bullish about. But by the same token, if you're not understanding it from the way we look at things, it's easy to have that cynical viewpoint. And I understand it. But I think it's sad because the majority of the country will be blindsided by what's coming next. You know, the thing with cryptocurrency, a lot of people jumped into it to make a fortune, and a lot of people did. You know, I remember you telling me to buy Theta at 5 cents, and those who were smart enough and saw things clearly enough did. Life changing. But I also think those that have stuck around long enough and have understood the fundamentals of why to own crypto. This is why I was always so enthusiastic about merging the crypto community with the hard asset metals community. The reasoning is the same. The flaw is that I don't think you buy gold and silver to get wealthy. Look, the arguments that you make for silver are phenomenal, and they're logical, and they make sense, and you could make an awful lot of money, but that's still not the reason why I buy it. Knowing in the back of my mind, sure, I could make a fortune if things finally get normal. But I think you buy it because we live in a world that is bizarro. It's insanity. And what gold and silver represent to me are 5,000 years worth of sanity. So yes, there's certainly great life-changing profit potential in silver as well. But I think the people at this show understood that, you know, there's room for both in the portfolio. And even though they both speak to the same pushback against a system that's broken and corrupt, the real reason to own it is because it's wealth and that it's outlived everything the world's thrown at it.
If silver manages to stabilize and commence a rebound from its current position, the initial resistance appears to be $22.30. A bullish breakout above this region could reignite upward momentum, paving the way for an advance toward $22.60, followed by $23.75. Could these ongoing changes in the silver market lead to a significant revaluation of the precious metal in the near future? Share your observations in the comments section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for watching.